So when I'm done my present,
and I think we're live here. Thanks everyone for joining this live stream. This is our Q1 market update. So for those of you who don't know about Forge & Foster and our Q1 market updates, I'll just give like a brief kind of introduction to our company. So Forge & Foster was started in 2016 by brothers Mark and Joe Accardi. They started out investing in various like multi-residential mixed-use properties. And now they've sort of moved more towards larger commercial redevelopment projects. So that's sort of the brief history of Forge & Foster. It's just like within the last couple of years that we've moved towards sort of being a very research-fueled organization. And we have definitely Alex here to thank for that. Alex is our head research associate at Forge & Foster. And so these Q updates are just an opportunity for us to kind of bring our community together and show them what we saw in the last quarter and maybe what we can expect moving forward into the next quarter. So my name is Liam McLaughlin. I'll be the kind of the host for this Q update. And I'm here joined by a few people who I'll introduce. Now the way this is going to be structured is, first off, we're going to have Alex Manojlovich. He's our head, like I said, he's our head of design and planning and research at Forge & Foster. So he kind of just keeps the team together with the latest research. And he's got a good eye for design, and he's really up to date on all the trends that are happening in commercial real estate. And so we're really excited to hear his thoughts on last quarter, but specifically he's going to be focusing on COVID-19 and the impact that has had on commercial real estate trends in Hamilton. Following Alex, we're really honored actually to be joined by Eric Turcotte. He's a partner with Urban Strategies, Inc. That's a company that's focused on master planning, community planning, and revitalization projects across Canada, the United States, and Europe. Eric has led a number of really successful award-winning urban design projects and master planning projects. He's bringing 23 years of experience in this field to this live stream here to talk about sort of what Urban Strategies is and why they have their eyes on Hamilton and sort of what we can expect moving forward in Hamilton and what we can expect for the future. And after Eric Turcotte, I have Joe Accardi. He's the president and CEO and partner of Forge & Foster. And Joe's going to be presenting on the latest trends we saw in Q1 and what we can expect moving forward into Q2, specifically in the Hamilton commercial real estate field. So those are the three presenters. I'll be kind of the intermediary between the three, introducing them. And at the end of the presentation, we're going to be having a question period. So we're probably going to take about 5 questions. And if you look to this side of the live stream, if you're on your computer, or I think below the live stream, if you're on your phone, there'll be a little section there where you can leave a comment. So I'll be taking a peek at that section every once in a while. And I'll be sort of selecting and keeping a few questions from there that I'll present at the end to the speakers. So yeah, if throughout this presentation you have any questions for the speakers, leave them in that chat box at the side there, and hopefully we'll get to them. And if we don't get to them, this will be uploaded to YouTube right after the live stream. So you can always leave your question in the comment section below, and in a couple days we'll check it and reply to as many as we can. So I guess, yeah, without further ado, I'm gonna introduce Alex Manojlovich, the head of planning and design at Forge & Foster, to present on the Hamilton commercial real estate trends impacted by COVID-19. So take it away, Alex.
thanks, Liam. And just give me 1 second to upload my presentation. There we go. Okay, welcome everyone again to our first virtual market update today. And to begin, I think it's important to understand the present landscape and where we started in order to provide and assemble an informed points of view and how to look forward. So what's the initial outlook and the view forward from here, and how has COVID-19 affected commercial real estate are going to be the two main questions that are going to be exploring here. And the former question is going to have some commercial real estate overlay as well. So the initial outlook, you might have seen this word being thrown around. It's unprecedented, and that's mainly true. Many people have been looking at the Spanish flu and are looking for trends and data and how to kind of combat this from a health perspective. And some economists have been looking at the GFC, the global financial crisis from 2008 and 9, as ways to look for and learn from an economic standpoint. But neither of those are truly a 1-by-1 ratio parallel to what we're experiencing now. In general, most large corporations will take a hit but carry on. But the real focus is the SMEs, the small and medium enterprises, and they're going to be the most impacted. And a lot of these programs that are coming out from the federal government are aimed to help that in particular. So economic shutdown is triggering historical job losses. We may have seen a few weeks ago some of the numbers from March. It was just released that just over 1 million jobs were shed in that month alone. And the unemployment rate as such has increased to 7.8%. In February, it was 5.6%. And I should say that those were kind of hovering around and grazing historic unemployment numbers. So we're really kind of originating from a place of strength. Most of those workers have been stated from StatCan that they're expecting them to return in 6 months. And a majority of the hardest hit sector is the service sector. The Conference Board of Canada is estimating just under 3 million people could be shed, or jobs, I should say, in March and April combined. However, a lot of these government packages that are coming out are looking to mitigate just this. And to get into that, I'm looking at some of the stimuli here. This isn't all of them, but these are some of the ones that focus on the broader range, and also some that are more commercial focused. So far the response has been incredible, especially when you compare it to the GFC. It's been much faster and larger. And some of that has been because of the prior knowledge we have from the GFC. Some of the programs that are being enacted have the framework from that previous experience, and also from a great response from the BOC, the Bank of Canada, as they've quickly slashed interest rates to near zero. It's currently at 0.25%. And a lot of other central banks have done the same around the world. And quantitative easing is starting to take effect as well. And for some of our viewers who may not know what that is just to briefly say, quantitative easing is a monetary policy where a central bank, so in our case, Bank of Canada, is purchasing a predetermined amount of government bonds in order to add money back into the economy. So to look at some of the programs that are happening right now or are looking to be introduced, the first big one is the Canada Emergency Response Benefit, and that just opened up on April 6th. That allows $2,000 a month for those who are eligible up to 4 months. And those are targeted for workers specifically who have lost their income due to COVID-19. Canada Emergency Business Account, that opened 3 days later, April 9th. That's looking to provide $25 billion program for SMEs that will give $40,000 of loans interest-free until December 31st of 2022. The Canada Emergency Wage Subsidy, that was introduced in March 28th. Once that was kind of introduced, it's been since improved upon. And at that time, they said it was about 3 to 6 weeks away. And we're still waiting to see when will that be enacted. And then lastly, the last one I wanted to focus on was the Canada Emergency Commercial Rent Assistance, which was just introduced 4 days ago. And that'll provide loans to commercial property owners that will lower or forego their rent to small businesses for April, May, and June. And again, these are only some of the measures that are looking to be enacted, and some of them have already begun. New measures are being introduced, established, updated every day. And looking back at the GFC again, the banks who were kind of at the epicenter of the problem back then are really not at that position this time, and they're able to provide an economic backstop along with these programs. And early stimulus reviews are very positive, especially for the CEREB program that Canadians have already received payment. I want to touch on this slightly, as it is a big portion to our economy, and it is a kind of a shining star for Canada. Canada leads the OECD in population growth. The OECD is the Organization of Economic Cooperation and Development. And they've been doing this for some time. It's really been a main focus for our country. In 2019, we saw an increase of over 500,000 people. That's the most ever recorded from StatsCan. And we also accept highly educated workers, as this graph shows in terms of population growth. But we also accept the fourth most immigrants out of the OECD as well. And the plan going forward was to push up that cap for the next 3 years. So it is a big factor, as it does help out demand for housing and does fill much needed jobs. And I just wanted to add this point in at the end here that really kind of shows the development landscape for North America. These numbers come from the RLB Crane Index, which looks at the 14 most construction-oriented cities in North America. And Toronto has been leading the way for the last 2 years by a wide margin. Toronto has 121 cranes by the last count. That was from a few weeks ago. In second place is Los Angeles with 47. So nowhere near the top of what Toronto is indicating. It really just kind of goes to preface and show how much of an impact immigration has, as Toronto is a big target for immigration. Looking ahead, some with a commercial real estate focus before getting truly into that analysis, is overall the market is nice currently. Income shock will be contained by fiscal and monetary policies. And those are going to be looking to bridge our way towards a recovery. Most predict, economists, that Q2 is going to be pretty terrible, to say the least, sharp downfall. But recoveries are expected to begin in Q3 and Q4 with an accelerated recovery in 2021. And Fred Demers, director of BMO, predicts this as well, saying 90 days before we see lower prices on the market, specifically with commercial real estate. So this may suggest that we have a summer that may still be in self-isolation. Those self-isolation measures may start to slightly relax in order to allow for some businesses, particular businesses, to begin again. Specifically, if you look at the timeframes of these policies, some of these kind of widely accepted economic outlooks, it seems to be the Q2 is the time period that is uncertainty and that is looking to really take a nosedive, and that's what these programs are targeting for, to really kind of take the brunt of this downfall. Also, if you remember, the market rhetoric before April was that no one was going to pay rent. However, that has not been the case. Before April came around, the stock markets were kind of declining, and then it's kind of taken a nice bump, as actually a lot of people have been paying their rent to most everyone's surprise and joy. May, June, and July is the real test, however, and we'll see how well these government policies work really until then. Discussions on reopening the economy have started, reportedly. The federal government and provinces have been talking, and we've seen this today from countries like Spain, who have been some of the hardest hit countries in Europe, and they've just begun to start talking about reopening in France as well. Catherine McKenna, the Minister of Infrastructure, has also been reported to be looking into speeding up shovel-ready projects, so infrastructure projects, which has led to Benjamin Tal, the CEO of CIBC, predicting that manufacturing and construction may be the first industries to normalize and maybe the first to be kind of relaxed a little bit to provide more economic kind of boost to our country. And lastly, the full economic recovery may depend on a vaccine, which has been widely sourced at 12 to 18 months away. And so this quote I always end on was just kind of really kind of contains it in one view, is that the real estate industry is not in distress, rather in pause. And that leads me into my second question I wanted to explore, is how has COVID-19 affected commercial real estate? And I'm going to be looking at some specific Hamilton examples as well. Specifically cap rates and debt. This is kind of more from our personal experience as well. Some of the reports I've been reading coming out of Toronto as well. So some buyers have assumed reduced rental income has led to traditional 5 caps and transitioning to 6 caps. So really expanding those. What I mean by that is, just for those of you who may not know, a cap rate or a capitalization rate is a industry metric that we use to assess property value. And it's the ratio of NOI to asset value, so your net operating income. So there's some buyers out there right now that are thinking that there's an inability right now to pay rent or to predict real rental growth for the foreseeable future. So that would depreciate your NOI and increase your cap rate. A lot of asset sales right now have really been frozen. It's really been more of a wait and see approach, especially from the seller side. And this is being seen in the housing market as well. So there are buyers out there that are approaching certain people that have maybe introducing prices that don't reflect what our current, or maybe from 2 weeks ago, value might be. And there haven't been a lot of takers right now. From a debt side, as I mentioned before, the BOC have dropped rates to near zero. However, as you can see, in about early March, a lot of the interest rates have increased from some of the more larger banks. And this is just reflective of the times right now, how it's very uncertain, and they're looking to just basically mitigate their risk. So some people who may have assumed that there might be a fire sale of distressed assets, this may not be the case, as right now it's pretty hard to access capital, to get refinancing, and a lot of this debt access is going to be relationship based, at least for the near term. And I should say also that it's a short term and long term that a lot of people are able to provide a prediction for, but it's this medium term where it's a bit murky. It's really hard to predict right now. It's really going to be affected of how much an impact these stimulus programs will provide. Onto the specific sectors. Office, I lump tech in here too because it's so impacted by office and tech. They have such a strong bond. And the question here is, will tech demand continue? I think it will. It's just too entrenched in almost every asset of our lives right now. I'm talking to you through my computer, through YouTube. I think that's just a testament to that. Some industries are suffering, a lot are thriving. Amazon can't hire enough people. They've been stated as wanting to hire 100,000 people. I think last time I checked, they were at 75,000. Biotech and pharmaceuticals are looking for us to get, we're looking to them to pull us through to an eventual vaccine. The government of Canada has provided $192 million towards vaccine research. 49 projects which are funded through that, are 2 of them are based out of McMaster. NGen, which is based out of McMaster Innovation Park, is investing $50 million in funding for COVID measures. And that's just right in our backyard. And I wanted, one last point for McMaster is that they're ranked for the 3rd consecutive year, the most research intensive university. So it's great to see these kind of initiatives that are happening right in our own backyard. Retail, most definitely the weakest kind of sector right now and the most vulnerable sector right now out of all the asset classes. And this is in main part due to e-commerce. Retail has been in decline for the last 15 years. And what we're seeing now hasn't been created by the pandemic, but really expedited by it. Shopping centers, restaurants, bookstores, we've all seen them close. And it's going to be interesting to see how they recover from this. Devin Wenning, he's the former CEO of eBay. He predicts US e-commerce share to double in the near term and then resend back slightly once we do hit a recovery. But it will definitely not go back to original levels that we've seen it before. And I think this is, you can say the same for Canada and most places in the world. But as I mentioned, that shopping centers are starting to close. Who knows when large gatherings are going to begin again? We heard from a few weeks ago that the Prime Minister of Japan obviously postponed the 2020 Olympics. He's not sure if even the 2021 Olympics is going to be possible. Sports, or when are we going to have fans in the stadiums, right? So shopping centers, these kind of large gathering places, when are they going to be able to fully reopen? And RioCan has noticed, just to kind of look at them specifically, that this trend has been happening, and they've been kind of getting rid of their tertiary city assets in order to focus on dense cities where there is foot traffic that they can rely on. And they've started to diversify their portfolio as well. So they've been introducing condominiums and residential projects within conjunction with their retail assets. And it's my prediction that you might see sooner than later some industrial related assets, if the zoning permits, and in certain cases, case by case, you might see some industrial brick and mortar start to get involved with these shopping centers potentially. And then local retail, obviously, as we mentioned, SMEs in tough right now, but we'll see. But they'll still be able to serve the broader neighborhood. Industrial. So you can't talk about retail without talking about industrial. They actually may be stronger because of this. Fundamentals for industrial sector in Canada, just Hamilton, have never been stronger prior to this. And they seem to be still robust. As you've seen, logistics, supply chain. So we talked about Amazon, e-commerce, they'll rely on these. And this is where a lot of the attention is kind of flowing into. To focus on cargo jet specifically, they're receiving so much demand, they've appealed to the government for some sort of subsidy. Cargojet does have a facility in Hamilton's airport, and they're currently building a new facility, 77,000 square feet. Hamilton's airport, also a subject I touched on a lot if you've seen from our prior Q updates. It's one of the busiest, or excuse me, it's one of the fastest growing airports in North America. It's the busiest nighttime cargo airport in Canada. And Cargojet is one of the many tenants that are really helping this growth. Just 2 weeks ago, maybe even sooner if I can't recall exactly, but it was just reported in the spec that Cargojet was flying in from Shanghai 75,000 pounds of personal protective equipment to be distributed to health care workers in the region. So having a major impact in that regard. And I should also add, it's the easiest entry of all real estate sectors. And what I mean by that is that if you look at all the real estate sectors, it still is by far the cheapest real estate sector to purchase and to get into. Multi-residential. Pre-COVID, as step-by-step with industrial, multi-residential was the leading asset class. You may have heard the term beds and sheds. That's where you want to kind of park your money in multi-residential and industrial. And Southwest Ontario still maintains a very tight supply. Again, immigration has a huge impact in this regard with fulfilling demand. And Hamilton rental rates were increasing. Vacancy rates were healthy again coming into March. Just to focus on the housing sector, it was looking like the beginning part of this year that we were looking at kind of like almost like a 2016 year type of numbers. It really increased. I think the beginning of March was a 25% increase in listings. And then at the back half of March, where we really saw the lockdown kind of take into effect, it's like actually a negative 14%. So we're really seeing that getting impacted in that regard. And so there's like two questions I would say, or risks to kind of think of is like, what are the rental guidelines going to look for the future? Are we going to get still increases? Are they going to flatline? If they do flatline, or if they do pause, what does that duration look like? And how is some of the stimulus programs going to be able to implement this and mitigate that? And then secondly, what is immigration's true impact going to be on this? And we'll see, like residential projects are still happening, though at a limited capacity, I should say. So if we are able to introduce more supply into the market, I don't know if it'll be a meaningful effect in order to severely reduce residential values. I'm going to leave this summary here. I won't get too much into it as I want to give Eric some time to present. But this will be recorded. This will be on our website. So if you want to look at this again, it will be here again. And I think this is just great to end off on. This is a quote from the CEO of, or the future CEO is coming in the summer of OMERS, is that this is a health crisis that we're living in right now with an economic implications, not an economic crisis in itself. So I think if we just do our part, do the things that we've been told to do, with self-isolation, with physical distancing, washing hands, little things like that, I think the rest of it will fall into place. Thank you.
Yeah, thanks so much for the for the presentation and the insights, Alex. Yeah, it's interesting to see how something like this would like negatively impact some industries like local retail, but then present such an opportunity for tech and industrial. So yeah, thank you for presenting that. And like Alex said, this will be uploaded to YouTube after, and I'll try to make the presentations available to view as well. But yeah, without saying too much, I'm gonna forward this on to Eric Turcotte to talk about urban strategies and why they have their eyes on Hamilton. So take it away, Eric.
Thank you, Alex. Can you hear me well?
Yeah, we can hear you.
Perfect. Okay, so again, my name is Eric Turcotte. I'm a partner at Urban Strategies. Our main office is located in Toronto. We're about a firm of 75 people, and we also now just recently opened an outfit in Hamilton at 66 James Street North, which we're quite proud of. In terms of what we do, as I said, we're about 75 people. We are a strategic planning urban design firm who worked on master planning, downtown revitalization. We do a lot of planning approval of various projects. So in Toronto, you would know East Harbor, you would know the Well, you would know the different project 2280 at Bloor and Dundas. So fairly large scale redevelopment as well as smaller scale development. We work on urban design guidelines. We work on different at different scale. And this kind of gives you an idea of the type of projects that we do, from the large to the very small. We work in industrial setting, in university campus, as I mentioned, and often the very complex type of project that involve layers of where mobility, where complex approval comes together. One difference that maybe one element our firm does, which is maybe a bit different than some other firm, is a lot of our project involve a high degree of consultation with various stakeholders, with either community, with the city, with developer. We try to bring people together to have a discussion. The other thing about urban strategies is about half our clients are public sector, but the other half are private sector. So we work with all the large developers, with all the funds. So we work with the various players, and what we also do is we work a little bit all over the world. We work across Canada from coast to coast. We work, not quite as much currently because we can't travel, but in England, across in Europe, as well as in Asia, and and then again a bit less right now, but in the United States is a place where we have done some work for a number of years. Now, as I mentioned earlier, we opened last fall what we call a collaborative studio at 66 James Street North, which is just north of Gore Park. It's a space that is that's a retail space that has a front door directly leading on the ground floor of James Street. And why Hamilton? Well, it's a city that we've been working in Hamilton for the last 20 years or so, a bit more than 20 years. So it's a place where we have a long history and a huge respect, because we think it's a very, very dynamic place that has a great culture heritage. So we want to be part of that mid-sized city renaissance. So it's a place that, it's has been reinventing itself. It's something when we started working in Hamilton that we foresaw coming, and we want to be part of the discussion. We want to be part of we part of that transformation. The studio itself is a very simple space. It's meant to be a flexible workspace for our team, so we can bring client, co-consultant, community dialogues into the place. So it's a place for. It is not just an extension of our Toronto studio. It's really meant to be a place to also engage, having a space for research, community collaboration. We had an event with some student from McMaster, Ryerson. We hosted the opening for the Council for Canadian Urbanism Summit last fall. So it's a place that we really see embedded into the fabric, and a place that allows us to also support the arts, the research, the community in a more direct way. We also have also a few staff that have moved to Hamilton and are working there on a permanent basis. So we're very proud of that, and we've been hosting some collaborative session with some of the community leaders, and something that will continue to do in that space. So since the 90s, so we're not new to Hamilton. So since the late 90s, we've been working on a series of projects, and I will just provide you with a kind of a bit of an overview of what those projects are. We've been working in the downtown in the economic and urban design strategy back in the 2000. We worked on some of the streetscape projects, street transformation, some of the waterfront plan, McMaster University. We've worked on some of the mobility and transit project, and as well as the macro level at the regional scales. And we're also working with some private sector client, one of them being Stelco. And I'll go into a little bit into more detail about the Stelco projects. So in the late 90s, we started some of our work on the downtown urban design strategies back in at the time where I would say that the goal here was to try to really bringing back investment into the downtown, creating a framework for investment. There was, if people remember at the time, there is a downtown core, and around it, very much of a ring of parking lots, of places where there was some disinvestment. Some of the plan here were really trying to see, how do we stitch back that the urban fabric? How do we continue to support the unique urban design experience, the heritage, the entertainment? How do we fill that gap? So the plan was meant to be a strategies for the revitalization and the investment into the place. This followed up slightly later with the downtown mobility street study. So we actually look at, the transformation of some of these corridors, including, Cannon, including James Street, how we could embed. So there was 5 of those priority mobility street that we referred to, where we were putting together a strategy for enhancing the safety, but also the image, and with the goal of, better linking the waterfront, the escarpment, the neighborhood together. Those were being seen as a key skeleton for those investments to transform the image, to create a framework for investment. We've worked on a number of plans in a neighborhood plan. So following the downtown strategy, we looked at all the territory of the downtown. We've looked at places like the West Harbor. So we work on the waterfront. West Harbor back in 2005 was one of the projects that we looked to see how to put it. To create a development plan, things that will come in that led to the creation of a secondary plan for this area, which set the stage for what you see today with Pier 8, all the transformation and a fantastic scheme that's been put together there. So that needed to be a series of a framework, a land use plan needed to be, a comprehensive land use plan needed to be put in place here that looked at how to integrate a new mixed use area with culture, how to integrate the cultural attraction, the restaurant, the mix of residential, commercial, and marine recreation. So that puts in place the planning framework that allows for these transformation to happen over time. Another project which we've worked in since the late 90s and through the year 2000, we've worked on a series of plan for McMaster University. So we're very familiar with the university, having done a master plan and master plan updates over the years. So in our experience, the university, and you could see with the innovation park that these university are key drivers in the economic development of city and brings and helped for that to maintain the viability of places. At the macro level, we've worked on some of the many transit project over the years. One of them that we are still involved with is with Metrolinx. We were helping them. We have been helping them in some of the improvement at key stations along the way, but also at the implementation of their RER system, looking at how the system will be extended. We worked on some of the business case for some of the station, understanding which one should be added and how the system will be extended over time. And at the macro level, we're currently working on the MTO, Greater Golden Horseshoe Transportation Plan. That's one of the, so Hamilton is part of that transformation. Maybe a project I'll just spend a few more minutes on is it's Stelco. We've been working with Stelco on looking at their the land assets that is within the that is, it's almost 800 acres of properties onto the waterfront. And obviously everyone knows about Stelco, about the steel industry. What we're part of our project is is the steel industry is going to continue to operate on the property, but there is, in addition to the steel component, there are it's a really large parcel of land, and not all of it is being used, frankly, for the steel industry. So the idea is to define the footprint to where the operation of the steel is going to continue to operate, and then reactivate the land, the remaining land, into an active industrial campus that can continue to provide vitality and jobs for the area. We've done, and this is kind of the master plan concept in progress. As we know and Alex has made allusion to that in his speech earlier, that there is clearly a lot of land that is, there's a lot of shortage of large industrial land currently into the GTHA. So it's something that there is high demand. And then the idea is to open the site, bring some, and we're starting to actually we're working on the site plan for bringing new roads to activate to the new parcel, so that it can, the lands that are in excess to the steel manufacturing can be utilized. We've also, one of the key things here is we want this to be an extraordinary, I mean, it is an industrial place that will have some interesting use, but we also want to make sure that we don't lose the history of Stelco, that we can continue to use and to pepper through the site and to have in place some of those industrial artifacts that will continue to create that, to maintain an image that is quite interesting, that is actually evocative, that tells the history of the site. For us, that's a crucial element. It's a placemaking element that tells about the history, and also we think uh, can make the place a meaningful and as well as activate that land. So thus, it's a project we're really proud of, that is in the process. We are at some point going to be coming with some application coming forward for new industrial user coming to be on that to that would have choose this place to implement their businesses. Just a little bit on COVID, because Alex was asking us to just talk about our response. I think that generally what we see is that from a business perspective, all our staff have been working remotely since March 16. It's been quite, it hasn't been too painful to implement. We were prepared. So from that perspective, I think everyone is, all our staff are currently working and connected. We've also developed and are in the process of developing some of our engagement tools. We've been advising other firms too about how to continue to be well connected. And as you could see, there's a lot of debate out there in terms of what's the future of our city, what's the future of public space, mobility, density, and it's something that Urban Strategies is continuing to be quite involved, providing commentary. I think that there is some sphere that they're discussing is density an issue? What we found though is that the cities have been very good at coping. Because they have the facilities, they do have the amenities to provide to support the population, and so something that we're having some public discussion on. From the development industries, we found that the responses varied. Some development are continuing to go ahead. Some of them have slowed down a little bit. What we found is though some of the issues relates to the planning department currently in the city of Toronto has not, there's some issue related to reviewing and filing applications. So they're not receiving any new application in terms of review. I think that has come to it's quite slow currently. So in that context, I would say that the application within the city of Toronto there's been a very slow response from that perspective versus other cities. And this is kudos I want to give to the city of Hamilton, which are still they're still they're still working at reviewing application. We are contacting, we're working with them on the Stelco file, as well as other municipalities around the GTA have been well prepared. Mississauga, Markham, Brampton, just to name a few, have just were prepared. They are continuing to have the design review panel. They're continue to review application, to receive revised application. So just on a last note, in building on Alex, I think we see that there's a big question about how quickly will things get going. Is it going to be July, August? I think the idea that things will change for a while until there's a vaccine that's in place is quite correct. How will we respond to COVID-19 in terms of our cities, our practices, but also in terms of the design of the public space? I think this is something we'll start to see more and more. I think there is, people living in too small of units into places that that may not support the connectivity that the social connectivity that people want. I think that's something that we'll keep an eye and they will continue to evolve. And I think some elements of our cities are going to change. The idea that there are shovel ready projects out there, I think that once this is the COVID is 19, that moment is when we're starting again. I think that the government has announced that they will be focusing on those shovel ready projects. Those are, I think, will be critical for those who have them. There is a task force in Hamilton they just recommended that a version of about how to reinvest the $1 billion or so from the LRT. And then, there's some question about whether they should be a reinvestment, a rethinking, and bringing it back a version of that LRT. But I think also that Hamilton, giving its heritage, its culture, its resiliency, I think that it is in a good position, and it will continue to thrive after. This is a place that we think, you have the university, and Innovation Park is doing well. There's those creative industries. There's the movies industry. I think these will, although everything is on pause right now, I strongly believe that it will come forward. It will come forward soon. Thank you.
Thanks so much, Eric. Yeah, that was a super informative presentation. I've lived in Hamilton my entire life, and so I know exactly what you mean when you talk about sort of the different pockets of Hamilton, and it has the heritage, it has the nature, and it has like the super passionate community. And I think the work you do to connect all of those together is really incredible. And I'm excited to ask you a couple questions about it in the Q&A. So just a reminder to everyone that there is a chat box at the side of this video here where you can leave questions for any of the speakers. At the end, we're going to be going through a few of them and getting answers for your questions. So if at any point you have a question for the speakers, just leave it in the box at the side. I'm going to introduce now Joe Accardi, the CEO and partner of Forge & Foster. He's going to go over the Q1 market update. So what Forge & Foster saw in the Hamilton commercial real estate market in Q1 2020. So take it away, Joe.
Awesome, Liam. And you can hear me okay?
Yep, we can hear you.
Excellent. Okay, thank you everybody for taking the time today. Really great presentation so far. Eric, I love those renderings that you showed of that massive Stelco lands over there. Those look stunning. So I can't wait to see what that becomes. But one of the things that I'm going to be doing right now is just talking about the Q1 market update. I'm going to keep it strictly to the time period, January 1st to March 31st. And believe it or not, given all the things that happened in late February and March, it was pretty much as expected in terms of where we're at in terms of sales and volume. So none of the, I guess, all the transactions that were pending to close, no indication that anything drastically fell. It seemed to be business as usual up until March 31st. I think, like Alex was mentioning, Q2 will be another story given some of the indications, but Q1 in terms of the commercial real estate world in Hamilton, pretty untouched. Okay, so going into some of the data here. So we got 85 transactions Q1 2020, 78 transactions Q1 2019. So here you see just the natural increase, happening in Hamilton. Some of the bigger picture things, like Alex was talking about, immigration. One of the things that we do in our office sometimes, just appreciate how big geographically Hamilton is. Whether you're going out to Grimsby Way or all the way out to Cambridge, or wrapping around, going up to the 401 near Milton, or wrapping around and being part of Burlington, Hamilton is absolutely massive geographically. So there's so many different things to talk about. And as immigration grows, and as the west end of Toronto KWC starts to grow, realize that Hamilton is jurisdiction on a whole bunch of that property. So we're seeing how that affects, and our anticipation is to continue to see growth and farmland turning into other uses, as we're seeing at the airport. We're seeing the port repurposed, and Eric showed us that massive Stelco lands that's made part of it. There's tons of opportunity. There's tons of space for this. So we saw that come together here. Going down a little bit further in terms of what traded in terms of dollar volume, 234 million in 2020, 217 million in 2019. So just naturally increased there. Nothing drastic either way. Like I said, all the deals appeared to have closed from a numeric point of view and in line with what 2019 came together. We'll see next quarter, but that's where we're at. In terms of Q1 2020 and looking at the breakdown by asset class, you see here white being 2020 and yellow being 2019. The commercial land was huge. We're going to show you some big airport transactions that have allowed us to get over the $60 million mark. Looking at residential land, there was a transaction. It was pretty robust, but last year, 2019, there was a residential transaction near the airport as well. So kind of playing on that airport theme for last year. Industrial had a great first quarter last year. This year, it's more within average on what's going on. So there's not too much on there. It was a big part of what was happening for last year was the industrial side. So that's just kind of flattening from there. Retail, you see that Q1 last year had that big trade, but that was the big trade by RioCan up on James North. And as Alex kind of mentioned, we believe RioCan's strategy is to densify, including residential. So that's a retail purchase, but perhaps more of a residential or densification play. And then last but not least, on the office side, multi-res is pretty flat. We saw the office transaction, and Forge & Foster was a big part of that for why such a big increase this year. We had acquired a big piece of MIP along with McMaster. So let's get right into the exciting trade. So from a big trend point of view, two big trends. First was the airport, and the second was tech this quarter. So kind of a similar theme. If you've been following MIP in the news, in particular, you would have seen quite a few key transactions, including the property in Aberdeen, the old red big warehouse building there was traded last year, including part of the land that allows Fridge Street to be connected. As well as the transaction that was just on Fridge Street. So there's a couple big ones there. And the second big trend was the airport. Quite a bit of land has been traded in the past 2 years. So not much has really changed in terms of the way we're looking at where the buyers are finding value and where the buyers are executing on the bigger transactions. This quarter, just like the past 2 years, has been a lot of attraction on the airport and on the MIP lands. This is the first transaction here. So this is a familiar name, Richard Paletta, big piece of land, 52 acres, right next near the airport. Kind of a trend that we've seen this group come into. They've acquired a few key pieces of property in Hamilton. And I think they're one of the groups on the major theme, which is, 5-10 years ago, you wouldn't see capital from other jurisdictions coming into Hamilton, and now you've certainly seen that. Hamilton's become more the on the map in terms of the major investors, and they're starting to buy some bigger parcels. Second transaction here, this is proudly Forge & Foster's transaction. This is 45 Frid. Most people know it by the building across from the Spectator Building. It's a group of buildings. We bought it from a group of retiring owners. We're thrilled to be the owners here. It's such a great piece of property now, but it has tons of potential. And it was really interesting timing as well. Just being so close to finding out that McMaster was acquiring the Spectator Building. So, you know, not much trade in this area in the past 30 years. And then now all of a sudden, a whole bunch of real estate has traded in the past 2 years, very similar to the airport. You know, not much going on. And then the theme becomes on everyone's radar, and then the properties start to transact. So here we got this property, $18 million, $176 a square foot. Tenants include Canada Post. The Spectator has rented out some parking on that side. We also have Aaron McDonald and some other good tenants, both national and local. Next transaction here, probably the most newsworthy of the quarter. This is 44 Fridge Street, the old Spectator Building, acquired by McMaster Innovation Park. Like I mentioned earlier, they've been on quite a roll on acquiring quite a bit in the area. They now, by our calculation, have almost 60 acres of property in this area. So, you know, definitely enough to fulfill their vision of a biotech park, autonomous vehicle park, 5G, and all the future looking opportunities that are happening. And it's amazing to be part of the city, to have them. McMaster has been you know, the rock in the community in the past 120 years, you know, changing industries and everything. And with their research, they've continued to you know, top the lists. And we're really excited to see what they're going to do here. Just for everyone, on a rendering that has been made public already, this is how the look is going to be looking south, knocking out a whole bunch of the windows. Looks great. And this is going to be lots of news is going to be obviously announced soon, but we understand a biotech theme is going to be brought to this park, so close to the McMaster Park on the other side of Frid. Here's another piece of rendering from MIP. So this is the southwest side. As you see, innovation parks are one of the infrastructures that are starting to grow around the world. And MIP put out this fantastic rendering on the same day as their spec launch. And as you can see, there's not only office buildings and research buildings, but there's also some towers here, which include some hotel and residential as well. So really incorporating the, you know, new generation thinking, which is you know, animated streets at all times. You know, ensure that there's always something going on. There's always a reason to be around, and that's where all the ideas bump off each other, and that's where the success is going to come from. Not too much different than the tried and true, you know, university campus that you know, has been working so well for the past 100 years or so, but this time on the research and the commercialization side. All right, last transaction and biggest for the quarter, a massive one. Broccolini Construction, 178 acres. These are big players. For those of you who know who they are, they've got you know, condos going on in Toronto. They're working on the entertainment district in Montreal. There's some Amazon development that they've been working on as well. So massive piece of property. As you can see right there, the airport is on the south side of that picture. And definitely expecting this group to convert on construction. So a massive transaction, both for Hamilton, both for the future, and a little bit of indication of what they're doing. If you can come take a look at this piece here. We got Quarante 30, which is an interesting name right now. Quarantine, it sounds like almost, but we got a few different developments here. First one is the million square foot or so industrial. They've also done the River and Fifth, which is a Toronto development, but massive group, massive capital, and a few of the major cities across Canada. And it's interesting to see Hamilton, you know, to be in that range with Toronto and Montreal as Hamilton continues to excel and grow. So that's good for my presentation here. I just want to put one more note besides, I guess, the big transactions on both the airport and on the research district and the MIP. I think there's been quite a bit of transactions on the west end of Hamilton right now, which is interesting to me. For those of you who followed us in the past couple quarter updates, you would know that the area of Highway 5 and Highway 6 near Waterdown has the Stryker development going on there, as well as you know, residential development and some other densification happening there. That's an area that was previously not developed. You have the airport, which is obviously being developed strongly by many different groups. And then on top of that, you got MIP, which is a site that was developed but has been underdeveloped, and you've seen some of the plans happening there for MIP. So really interesting to see such a 3 different areas of development in Hamilton right now that like I was saying, had all their transactions in the past 2 or 3 years. A lot of trading hands from there, and now they're owned by concentrated groups, and they're starting to excel on their development. So definitely keep in the loop on what's going on in those areas. And I just want to conclude the project with that, or conclude the presentation with that. So thank you everyone for coming. And like Liam said, this will be recorded, and we're happy to take your questions.
Thanks, Joe. So yeah, like I've been saying throughout the presentation, if people just want to leave some questions in the sidebar there, we'll do our best to get to them. I see a few questions there so far, so I think I'm going to jump into asking them. And Alex and Eric, if you want to turn your cameras back on, feel free. So I'm going to just pull up one of these questions on my screen here, and we can go through them. All right. So this is a question from Adrian, and I believe it's directed towards you, Eric, but feel free, Alex, if you have Alex or Joe, if you have any input on this. He's asking how much of the 800-acre Stelco land can be reimagined.
I don't have the number offhand right now, but it's I would say it's probably it's slightly more than half the land that is actually can go back into that can actually be reintroduced. So the steel industry is continuing the manufacturing. So with the blast furnace and the cold the finishing plant. So and with some of the uses that of the space that they need, but that's probably in that the 400 to 500 acres.
And so Lachlan had a question. For those of you who don't know, Lachlan is a super passionate young guy from Hamilton, and he's really passionate about Hamilton city building. So he says that his count is that Hamilton currently has 13 towers proposed exactly to the escarpment height limit, and another 3 above the height limit that will likely be chopped down to the height limit. He's asking, does Urban Strategies see an opportunity for going above and beyond the height limit? And is it desirable to build every tower to the same height? And he just concludes saying, cities like Mississauga, Vaughan, Brampton, etc., are all more ambitious in the development goals than us.
Mm-hmm. It's a good question, because this is, ultimately, there is a desire. So everyone needs to have a say in the kind of the vision of their cities, the kind of the shape, the level of densities. It's this community. It's a collective dialogue. The city of Hamilton has gone through the official plan review, and as part of that process, which we all have to respect because that's part of a community discussion, the escarpment was felt that it was a height that seems appropriate for Hamilton. So it's a made in Hamilton discussion. I understand that there are places where they could be some difference in terms of you can actually, in some places you could go a bit higher, some don't. I think having a diversity of height is always something that's desirable. You look at Ottawa has set the height limit of the building in the downtown to protect some views of the Parliament. Montreal has the mountain. So I think it's a question of, at that point, in terms of the type of decision that has been done through our process to understand how a community wants to continue to evolve. There's no right or wrong here. I think it is part of that, of a decision of a community to shape these decisions.
Great. And I think there's a question here from Julio for you, Joe. He's asking, what has Fortune Foster's experience been with respect to COVID-19 related rent relief requests from tenants? And how have we been responding to that? I realize this is a very, this is an issue that's top of mind for a lot of small business owners in Hamilton and Canada, where, due to forced closures, they can't operate their businesses any longer. And so I guess, the question is what has our response been to that?
Yeah, for sure. And the situation has been changing, both for the worse in March, and then I think there's been a lot of relief on how the government has responded with a lot of programs that have helped. Overall, I think Alex touched upon what the specific impacts are. Small business are the ones that they can't open in some situations. You're talking about gyms, restaurants, bars, places like that have had no income whatsoever. So obviously for us, we've reached out and we've made sure that all the businesses, especially small businesses, are going to be able to succeed a year from now. And what is that going to take? I think the word pause is how it is you don't want anybody to be either negatively affected or feel like there's a lot of uncertainty. I think everyone is trying to just get past this pause and back to business as usual. But I'm concerned about a lot of the energy that's been happening in downtown Hamilton the past 10 years. I think 20 years ago, everyone remembers how much progress has been made in the past 10 years. A lot of that are startups and small businesses. So I think especially in terms of the assistance happening for startups, for example, it's really tough to start a business right now or to get the support right now because you don't have the financials. So I'm thinking that we're going to be really having to support a lot of the small businesses in downtown Hamilton in particular, and we're doing our part.
Thanks. Yeah, that's great to hear. Small businesses are really just the driving force of our economy. So it's good to hear that local landlords and even larger institutional landlords are sort of are helping them get through this.
Yeah, I think everybody wants to work together to get back to normal. I think that's the goal, and not to use this to get one ahead or one behind. It's just let's just get back to normal.
Yeah. Just a reminder, everyone, leave your questions in the side chat box there. That I've gone through all the questions that are there right now, but I did have a question for you, Eric. Mm-hmm. So yeah, obviously, Urban Strategies has been doing a lot of work in Hamilton over the past 30 years or so. My question is what do you think are some of Hamilton's biggest constraints to growth? And how do you think Hamilton can best overcome those constraints?
Well, I think some of the constraint, I would say that, I mean, one thing that we've been experiencing, I think and this is one of my, I think the cancellation of the LRT. I think that the improving the mobility between in the Toronto Hamilton corridor is crucial. I think that also because workforce will travel wants to travel easily from one place to the other. That to me, it's one of the critical piece. I think that investing in a transit in one way or another is quite critical. And I would say that that is one of the elements. I would say that from a very positive, very positive to experience from Hamilton is the planning department and the decision maker at City Hall are actually working really hard to accelerate the process, because sometimes we always feel like things are not moving fast enough. There's a little bit of overburden, red tape. What I've found here is the extraordinary, especially at the leadership level, to make sure that things move forward as smoothly as possible. Obviously, making sure due diligence are done properly, but there is clearly an open for business attitude.
Yeah, thanks. I would agree with that. I think that we to grow as a city, we really need to connect ourselves with our biggest neighbor, Toronto. Yeah, I do feel like that's one of the biggest kind of constraints to our growth, is just how difficult it is to get to Toronto by public transportation. Not that it's difficult, but that it's maybe not as easy as it could be.
Yes, the
fast.
goal is to make it as seamless and as fast as possible. So that's something that I think is a critical piece.
Yeah. What about you, Joe? From your experience, what do you think are some of Hamilton's biggest constraints?
Yeah, I think first off, I think Hamilton's been doing a lot of things right. Like I was just mentioning a second ago, I think the past 10 years, from where we were to where we are now, both from a small business to big business point of view, I think there's a lot to be excited about. I think the next decade will be excellent as well. I mentioned too how big geographically Hamilton is and all the opportunities. So first off, I think we got to keep on doing a lot of things that we're going to be doing. Don't get too down on ourselves about, what's this, I guess this pause that's happening right now. Let's be, happy and healthy, of course, first. But secondly, whether it be the Stelco lands or the airport or the port by the lake or MIP or the downtown activity that's going on, I think we just got to continue to support each other. I think who's going to need help in the next couple of years, I think it is going to be the small businesses to get back. You want those small businesses to turn into medium-sized businesses. You want those startups to turn into viable business plans. So I think really starting to support each other in Hamilton is really important. Plus, I think, we got to say it, the next 10 years are going to be impacted by technology way more than the past 10 years before that. So there's going to be a lot of change going on. We're talking about, how to handle electric bikes, how to handle electric scooters, how to handle data security, and the fact that cameras are here, and how to handle like a lot of these things. So, the city of Hamilton has a lot of work to do, and Canada does on how the future looks. Are solar panels viable? Are EVs viable? What's going on with this other thing we haven't talked about at all, which is, oil is trading at $12 this morning. Like it's unbelievable the change that's happening right now. I think you have to put away a lot of what has worked in the past or has happened in the past, and just realize the future is going to look very, very different. And if Hamilton can grasp that, and perhaps the electrification of the next 10 years, I think there's tons of opportunities that continue to grasp on.
Awesome. Alex, did you have anything to add? Oh, you're on mute right now.
Thank you. Can you hear me now?
Yeah.
Excuse me. No, I was saying that nothing that I don't think is new. I would just piggyback on kind of Eric's and Joe's touching points is that like from a Hamilton standpoint, the biggest point of contention, at least before COVID-19 situation kind of had us all locked up, was the LRT. And I would say that's what our mayoral vote was pretty much based on majorly. So if we're going to see that back, what does that look like? Eric also touched on that the task force did make a recommendation. Is it part of an infrastructure kind of revitalization to help boost the economy? Who's to say? And then secondly, Joe touched on it very well, is like we are kind of getting shepherded in this new wave of tech, and this situation is really accelerated, specifically with the emergence of e-commerce. You've kind of seen that preparation already at the airport, but what does that look like in areas where it's a little bit more landlocked, like the downtowns, right? And we've seen 5G networks starting to get implemented. How does that unlock certain situations? Are we going to be working from home a little bit more? I don't think it's going to be entirely like some people are predicting. I think a lot of us are looking to get our sanity back by meeting people in person. So I don't think that's going to go away in any regard. So just anticipating and being prepared for how to adapt these kind of new ventures that are going to come down the road, and really for Hamilton to be prepared for that, take advantage of that.
Awesome.
Yeah, just if I can say one more thing on I just can't stress enough on the two biggest things that have impacted, you know, the GTHA area in the past 10, 20 years has been technology and immigration. And I think Hamilton can't lose sight of what that means, what, you know, more smart people through immigration means for the community, and what all the businesses turning more to technology, what that means for the community, because those have been the key drivers and will continue to be.
We have a question here from Ben Ames, and I think I'll throw it on to you first, Alex, since you're the one who presented on the stimulus package, but I'll also put it to the rest of the group after. He's asking, what are everyone's thoughts on the federal stimulus provided so far? And are there any other ways to help small businesses right now?
Yeah, I kind of touched on this with my presentation. I thought I guess the time frame of which everything's been implemented has been very quick. I think that's been the consensus widely. And I think we've had a bit of a bonus, if you can call it that, for lack of a better word, just from the GFC happening, having those frameworks in place. Again, we're in the early days of these getting implemented, so it remains to be seen the full impact of how these stimulus programs are going to actually have to take into effect. I was reading a report from CBRE that kind of compares Canada's situation to the US. And I think I can't remember the gentleman who wrote the report, but they were saying if we didn't lease out 1 more square foot of industrial space, we would still be better off than the US is right now for the whole year. And there was a graph, I don't know if I mentioned it, I can't recall, during my presentation that focused on the industrial sector, and I looked at availability rates for North America. And the top 10 tightest markets in North America are all in Canada. Number 10 is Hamilton. So I think it just shows you the virtue in that regard of how strong, at least in the industrial sector, the businesses are happening right there. And I'm really excited or hopeful to see exactly how this Canadian emergency commercial benefit is going to be enacted. And like I said, it was just announced just before the weekend. And it was just an announcement. So we'll see how that will affect businesses going forward. Obviously, it needs to happen sooner rather than later in order to take an immediate effect. But they did mention in the announcement too that it would be retroactive for April, May, and June. So the Q2 kind of months that have been targeted by a lot of economists as saying being the roughest, and that's because, quite frankly, the shutdown was pretty immediate and sudden. And so we're just trying to get the ball rolling, and the federal government is by enacting these programs. So while that is getting up and running, these are going to be the hardest times right now in the next few months. But it's great to see the speed right now, and I know it's a lot, but it's hopeful to see that that'll be a little bit quicker, especially with the wage subsidy program, and hopefully that's around the corner.
Nice. What about you, Eric?
What I found with what I found is just to build on Alex is the government has been fairly quick to respond. They've been also very nimble in terms of they are able to what they some solution might last. There was the rent relief announcement that happened late last week. If they are, what I found is they're quick at adapting the proposal moving forward. So what could there be at this point? I am not sure, but I found that they seem to be listening. The last thing they want to do is, they don't want to see businesses close. They want to see people staying at work. They are trying to, I actually think they are trying their best and adapting the solution and tailoring them as they know what the issues are, and proposing some program that can be helpful for as many people as possible.
Nice. And Joe, did you have anything to say about the government stimulus package?
Yeah, I'm proud to be Canadian. I think I think it's been appropriate. I think it's been well managed overall. And I think and the indicator was the 10% wage subsidy turning into the 75% wage subsidy, is that the announcements will be smaller and they'll increase if needed. And like Eric said, in a more specific way. I think commercial rent for a lot of small businesses is the biggest expense, and so they're looking to help exactly in that nature. The other biggest expense is usually wages, and they're looking to help in exactly that nature. So, I'm encouraged, or I'm thrilled to be Canadian at this point in time. I think we're gonna stick together, whether it be the community or neighborhood we're in, or the government across Canada. I think we're going to do what's appropriate. Just keep the incentives, the incentive to work there, and to have the incentive to work there is you have to stay on the payroll for what it is. So I think they're going to be doing the right thing going forward, and I'm happy with what I've seen so far.
Thank you. Yeah, I'm happy to see the government's response to this and supporting small businesses. Like I said, I think they're the driving force, and they are the driving force of our economy. So it's good to see them come out and support it. There are no more questions in the chat box, but I think I have a question for you, Joe. What's that building in the background there?
Excellent. I had to choose a background in no time. I got my garage back here, and I wanted to switch it up. So this is 111 Sherwood. This is our latest project in Brantford. This has got a very interesting history. It's an old rope factory. It was the largest in the British Empire at one time. Absolutely gorgeous building, as you can see back here. 100% natural light during the day. They built the building, to last with, the best materials. We just brought it back to its, I guess, natural elements, the steel, the wood boards, everything, the glass restored, and it looks absolutely fantastic in person. And just in COVID nature, we got shut down before we could put up this last piece of drywall over here. So you got a little piece of where we're at in terms of the state, but we'll get that last piece up and painted, and we'll be on our way. But we're really happy to be the owners of that building, and it's about 190,000 square feet of flex space that we're midway through getting done.
Nice. Yeah, and that space is available right now. The one that you're currently, or I guess the one that your background is, it's 35,000 square feet. It was the main building of the rope factory, and right now it is available for lease. And we are offering it also to companies that are supporting the COVID-19 relief efforts. So if you do know of any companies that are contributing to the COVID-19 relief efforts, and they're looking for larger industrial space, and they're in the Brantford area, please do reach out to us, because we are looking to get that space filled with someone who's supporting the community right now. So I think that's about it for the live stream today. Once again, I want to thank Eric Turcotte for being here.
Thank you.
For sharing his insights. yeah, like what Urban Strategies does for the city and for all cities across North America and Europe is just incredible. And we're super honored to have you on the live stream.
My pleasure.
I want to thank everyone else for joining us, everyone who tuned in. If you're watching this after the live stream has ended, it is available on YouTube. It should be available on the same link. And if you do have any questions that we missed, or if you didn't get a chance to answer to ask your question, you can leave it in the comment section below, and we'll get to them within a couple days. Because yeah, we do want to like the whole purpose of this Q update is to sort of provide you the information we know and answer your questions and sort of support our community of investors and support our community of support our entire network. So yeah, I think that's everything for me. Joe, did you want to close this off?
No, you did a great job. Thank
Great.
you. Thank you for hosting, Lisa. Yeah, well done.
All right. Thanks, everyone.
Thank you.
Thank you.
Okay. Bye-bye.